What's up, guys? Welcome back to my channel. So I know it's been a while since I made a video about the S&P 500 and the overall markets, but I'm going to be doing that in this video because right now I see that there's two camps for the S&P 500 and they're both on opposite extremes. One camp is saying that the S&P 500 is going to break 760 and make new all-time highs, and the other camp is just saying it's going to crash. We're going to retrace, a good portion of the rally from the April lows, and I'm going to be going over the technicals to see which one is actually more likely than another. And the technicals actually tell a pretty good picture, so I'm just going to go right to it. So the S&P 500, it's currently sitting at 745. And if you just kind of take a big picture look at the S&P 500, you can see that we just completed a ABC correction. So you can see that this is the first wave A, and then the second wave for a retracement for B, which is a lower high than the 760 here, and then a final C flush down. And I just want to mention the resilience of the S&P 500 because you can see that, on the final C wave, when it actually flushed, we actually closed below the 50 daily moving average, which is this blue line here. And, previously we got support, bounces off the 50. We got bounces out of the 50, and then we got a close below the 50, which made a lot of people think that, we're just going to crash. And plus, mind you, this was on a Friday. So that weekend, there was a lot of people calling for a 3% gap down. Like I saw a lot of bear porn, that weekend that was going to retest like 706 at the next level to look for is at that low 700s, high 680s, 690s. But what did we do that following week, which is this week? We got a gap up and then we put in a hammer candle, and now we're closing above the 9 exponential moving average. So, bears had all the power, all the opportunity to really flush this lower, and they really couldn't do it. And so, bears had a chance, they didn't take it, and now the bulls look to be in control. And now, what else supports this narrative that the bulls are in control? Now, if you look at um, this move up from the April lows, you can see that this was pretty much a continuous move. Like, we didn't really close below the 9 exponential moving average. We finally got it recently in early June, which was last month. We got an ABC correction, and then now it looks to resume higher. That's the first clue. The second clue is that we're finally closing above the 9 exponential moving average again. So previously, when we gapped up for the B wave, you can see that it didn't really hold, and we got several red candles to accompany that B wave. And then we finally got that C flush, and you can see that we're reclaiming the 9 EMA again. So this time it's hugging the exponential moving average more closely, and you can see that we got several green candles off of it. And um yeah, and so if you look at this is a daily time frame, you can see that the MACD also wants to curl higher. And if it really wanted, you can say that there's a trend line here that the market is struggling to break through, and if it does break through, then we can start a new bullish trend, but we're not out of the woods yet. You can see that the MACD is trying to curl, but it's still remaining in somewhat sort of a bearish momentum here. It's trying to curl. Maybe it'll base out for another few days or so. But you can see that the supports are currently sitting at the 9, which is 941 or 741 or 740, and then the 50 again, which is 736. So you can see that the futures are currently down around 1 point, and that isn't really much to make people cautious because we're still well above this 9 EMA and 50 DMA. If you look at the 4 hour, this is where things get a little bit iffy because you can see that the MACD here wants to curl down, that wants to have a change in trend. So you can see that we put in a bullish divergence here. We got the divergence on the RSI and the MACD, and price made a lower low, got that wick flushed around 716, and then we started to climb higher. Now, ever since the beginning of this week, we had continuous green bars because of the MACD. The MACD was, we had a bullish momentum throughout this week on the 4 hour. So you never know if things could change, once we get that, 4 hour cross on the MACD. But I mentioned in the previous video that the 200 DMA was going to be a problem on the 4 hour time frame because that's the red line here. So we rejected, it became resistance, support, resistance, and you know, let me see if I'm actually recording. Yeah, that's cool. You know, this is going to be, uh, I would say that, because we got above the 4 hour or the 4 hour 200 moving average, it's going to act as support, but you never know if we come down. Again, it's going to be a problem. But so far, we have the 100, the 50, which is the white and blue line here, and the 200 ready to catch price action if, it decides to come down even more to 738, 739. So I believe that these moving averages could act as support. The 4-hour MACD is going to be turning red soon, so we're going to see how that plays out. But, there could be the case where the 4-hour MACD, gets across, but we still, trade sideways, and then we finally get that push up. So, and break above this trend line. So that's what I'm going to be looking for in the foreseeable future. But we'll have to play things by ear. And the next thing I want to talk about is the weekly. So I think the weekly is actually, you know, telling me much more because when the market decides to roll over, you could see that the MACD is bearish. So there's bearish weekly momentum, but you can see that the MACD on the weekly is still remaining bullish, signaling that there's bullish momentum. And you can see that we're holding above the 9 weekly very, very well, which is this yellow line here. So until the 9 weekly breaks, we had four, weekly red bars on the S&P 500 falling in an insane move up. So to me, this looks more like consolidation before another push higher. It doesn't really necessarily signal a change in trend. We didn't really break any moving averages. So, until the moving averages start coming down, that's when we have to be cautious. But, I'm not seeing anything like that anytime soon. So, so far so good. Maybe we get another push up to like 780, 770, and then we finally get another, red weekly candle. But, you know, so far holding up against a lot of supports. And you can see that on the hourly, there's a head and shoulders pattern on the hourly time frame. Not sure if that's going to hold up or it's going to bring us right down to like 740. We'll have to see. And then if that happens, then maybe that uh, this blue line here is going to act as resistance. But we'll have to see. We'll have to play this by ear. And then the next thing we'll talk about is the triple Q. So the triple Qs is a lot weaker than the S&P 500 because the semiconductor names or actually it's what's driving the triple Qs now. It used to be the Mag 7 that's driving the triple Qs, but now, these memory and chip names have gotten so large that they affect the Nasdaq way more than the Mag 7 names. So on the triple Qs, we're forming some sort of like, symmetrical triangle here. And we do have a 4-hour cross on the MACD. So momentum is bearish right now, but we just got above these, moving averages and they're kind of consolidating. So we'll have to see, what becomes of, triple Qs, does it really break down? Does it fake out and then just kind of push higher? Cheddar Flow did mention that there was like a lot of 800 calls on the triple Qs that were coming in for the leap expiration. So maybe like next year, March and April. So this does kind of support the theory that, the triple Qs are going to push even higher, over the next coming sessions. And we didn't get to like 750 in its most recent high. So 800 actually wouldn't be too much of a stretch if you kind of think about it. And again, the MACD looks like it really wants to just curl higher. I know it's going to take some time, but, at this moment, it's just consolidation after a huge move up. I think most likely scenario that, if I'm reading this correctly, it's going to be consolidation for continuation in the same trend. And on the weekly time frame, again, like there's no evidence of breakdown in the MACD. Momentum is still bullish on the weekly time frame. The 9 EMA is holding up correctly. So, all else, stays the same, momentum should continue to push higher for the S&P 500 and the Nasdaq in the near term future. So, hope this helps you guys, with your, analysis on the overall markets. And if you decide to hold any individual tickers, as long as the market's in good condition, then the ticker should be safe, right? And so, yeah, I hope this helps, and I'll see you guys in the next video. Peace.